Hey traders, we're taking a look at the markets a half hour in front of the minimum bid rate where there is widely expected to be no change from Mario Draghi in terms of the rate. However, as always, the fireworks are typically waiting for the presser, which is at 8:30 a.m. Join me in the chat room. We're going to be setting that up at the helm live, crunching that PMR information, making sure we're at those catch the wick opportunistic levels. And let me talk a little bit about high heat hot zones or major impacts. However you want to take a look at an event like the ECB this morning. There's two ways you can look at this. Now, I'm looking at the Dow right now because I want to know what kind of market we're seeing in front of the ECB, because the ECB, China, different stories where we have accommodative central banks flooding the market with cheap currency. Hey, the equities markets love it. Doesn't have to be the Dow. You can take a look at the S&P. You can see what the DAX has been up to. I've been long in different places to varying degrees, equities markets all over the globe, because we have overall risk appetite. In fact, a lot of you actually, it was interesting, emailed me yesterday about the grains. There was a China relationship back to grains we had touched on really briefly, maybe 2 months back, and I had a flood of questions about that. I saw the price action. I see what you guys are talking about. I'll do that in a second video here for this email. So I know I don't really usually reach out to you guys in the morning, but I wanted to kind of give you a primer for what we have coming up the rest of the day. So let's dive into the Euro story. So Euro US would be the first place to start. I know many of you have gone ahead, taken your optional profit target, and are sitting flat in the Euro US. That's fine with me. I still have a very small position in Euro US. And by very small, I mean I'm down to that last quarter. That's typically where I'm at after I hit a profit target. And that means half of my position has been taken off the table. A second profit target would be another quarter. Now, we've been waiting for that 95 print for some time. When the markets went back down through 1345, because we do have this hot zone, I went ahead and took another quarter off the table so I minimize my exposure to risk. Now, there is a pretty wide expectation that the euro is going to rally on Draghi. And ultimately, when we see the clarity on the daily or a longer term intraday time frame like a 240 or a 480, that ultimately might be the direction. But catch the wick is not about the direction we'll take overall. Catch the wick's about the volatility spikes we'll see as the market's trying to figure out what it wants to do. So I want to take a look at the heat map here and re-examine where our opportunities are in the euro. Now, I know euro pound's been tough because that pound has been very resilient, and I've mentioned we've put on really what amounted to an epic short squeeze in the pound sterling. And what that's done now it's actually taken away some of the clarity on the euro pound specifically. Now, euro pound being one of the slightest contrasts we have, notice that we're sitting really at a level that we could start to consider as approaching being oversold. So I'm talking about oversold being somewhere starting at about 78.50 all the way down to around the area around 78, as you can see here. Take a look at that low, 30. So 78.50 to 78.30 is what I'm looking at as being oversold on the euro pound. Is this anywhere near as clear as the trend we have on the euro US? It absolutely is not. So here's the thing. What do I want to do? I want to continue to focus on euro buys. Now we can take a look at the one-day relative performance here. Take a quick peek at how the euro is doing today. Notice here's that crazy stubborn pound. And this pound shook off some pretty disappointing retail sales data earlier today. Take a peek. You want to know how strong the pound is? It's in full honey badger mode. It doesn't care. What we're getting now is, I believe, the short squeeze that I was expecting that would happen sometime in May to June. Not necessarily mid to late April, but hey, here's the thing. We ran out ahead of the Brexit story so much, and the data and the information surrounding just the calamity that would ensue if Brexit were voted yes, if the UK were to leave the European Union. That has become a vote that people see as the more dangerous of the two. Not the optimistic vote of, hey, let's leave and see what happens and see if things get better. No, it's, hey, if we leave, all these negative things are going to happen. So what's happening is the polls are starting to reflect, not a huge disparity, but the polls are starting to reflect the fact that the voters are likely to want to stay and keep the status quo. That's pretty normal when it comes to human psychology. And when you're also given an onslaught of negative scenarios for voting otherwise, it makes sense that traders are thinking, whatever selling pressure we put on the pound in expectation of maybe they want to leave the EU, maybe the UK wants to leave the EU, here's all the negative things that would happen. They're just tapping the brakes, pulling in the reins and realizing profits on what's been a great pound sell-off. The next thing that so the question is, what could be the next trigger for the pound? We'll talk about that later this week. Right now, I want to keep an eye on the euro. The pound is part of the euro-pound story. I still believe the euro could longer term be stronger than the pound, but it's going to be more about an oversold distribution fade. Throw your slow stochastic on here. Now, what about the rest of the story? What if, and I want to keep a what if scenario. Let me give you a what if scenario watch list. So my primary watch list is Euro US, then Euro Pound. The what if watch list, what does that mean? What if the euro really weakens? Look for weakness. Look to sell euro if the euro really weakens and we start to see the rollover. I don't think it's going to happen necessarily today, but the two primary places that I will look, if for whatever reason the euro gets its legs swept out from underneath it, is going to be trend follows to the downside. Sell euro, buy Aussie, or sell euro, buy Canadian dollar. Now that's not likely to happen today necessarily, but I'm going to be keeping an eye on this what if scenario, because the danger is we fall in love with one scenario, euro buy, and forget that if we do see a shift, if it's a real game changer, have a reserve watch list. Have the what if watch list. Not my primary, but definitely something to keep in the back of our minds. In the meanwhile, what happens to the US dollar and what's the watch list there? If the euro ultimately continues to strengthen, we have an overall short in the US dollar index that we've continued to manage. And much like the euro US, where I'm down to 1/4, the same thing is true for the dollar index. If the dollar index continues lower, obviously that bodes well for the buy on euro US. I also want to consider US dollar shorts against the Australian dollar and against the Canadian dollar. So those will be two other, again, for the primary watch list. Now, what am I hoping for? Look, hopes are for birthday cakes, hopes and wishes, right? But if I get volatility that is opportunistic, dollar strength, US dollar strength, or euro weakness, look for opportunities to sell US dollars into strength and buy euro into weakness. And that's going to be my plan for today. You can pre-position yourself in a market, or you can wait for the volatility to carry you to price levels that you would like to trigger. I'm of the latter camp. This whole guessing game of what are they going to do, what are they going to say, how's the market going to react, that's a pure guess. That's a pure gamble. You can do all the technicals and all the fundamental research and all the price act. At the end of the day, just keep in mind where you want to enter the market and see if the market can carry down to that level. So I don't believe in guessing at what's going to happen. All I know for sure, and the way that I build a trade is, I know we're going to have volatility. And during the morning chat, we're going to crunch those price movement ranges to define what that range could be, and then get opportunistic on what's a realistic range for the kind of movement that the ECB will trigger.